The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time, right here at 877-927-6648. Great programming earlier on. Let's keep that stand up. Dow's down 36 at 21,147. S&P is at 2431. It's down 5. The comp index at this particular point is down. It is down. Let me just move that right. Down 4 at 62.91. This is very interesting because we've got the VIX index up 42 cents at 10.49. Going to double digits again, but not accelerating yet into the 11s. The E-mini right here is down 425. There's no other way I can count this. We've made a peak B. I'm expecting we should go to a C and a D. Doesn't have to be much higher, but I think it will go there. And the weekly chart is in leg. I'm calling this a leg E. I'm not going to call it any alternate count. E for now. 120-minute chart made a peak D. Chapman wave methodology. What do we look for? We always look for 4 peaks, 4 higher peaks, alphabetically notarized as uppercase A, B, C, and D. At that 4th peak, other things can happen. It could go still to an E, F, and G. It could recycle, have a brand new buy mode. Meantime, 2439.75 was the high, in fact, the all-time high. And now the E-mini has gone to this rectangle formation. 2427 was the low that it had to hold. It just stuck a tad under it. It went to 26.25, trading right now 2430.50. I suspect that it's going to try to make some kind of a base here in which to move higher. Now, one of the things we were looking for is in the Chapman wave methodology. We had a trend gauge reading on Friday, which suggested that there should be some kind of a 9 to 11 point move to the upside. Actually, from the low, there was a rally went into Sunday night, and we've been consolidating ever since. What's really important about this is that the technicals have really slipped very sharply, and yet the price is held quite well in the 120-minute chart. I'm going to get rid of this because I want to go through one at a time. We'll just do that as we usually do. Here we go. Let me go back to the Dow INDU. Okay. So the Dow has gone to a peak D. I said at peak D, other things can happen. Look at the weekly chart at 21,169 the 1st of March, and look at that in 13-week consolidation, so other things can happen. However, in the monthly chart, we went to a D, and then very quickly, within 3 months, with only a nominal dip. In other words, the high that was made after the March high of 21,169 was 21,070. Big deal, 120 points difference. Next month of May had a slightly higher monthly chart, but not as high as it was in March. And then this month, right in the first day, boom, it went to a new high. And now I'm a little concerned, even though on a very short-term basis, we're actually quite bullish, looking for new highs to come. I'm expecting that by week's end, maybe early next week, we start to see some kind of deterioration, and then I think we're in for a pretty sharp pullback. This is, we're talking about 5, 6, 7%. It could be more, but I think that we're looking for some kind of a pullback. All right, let's go on. I'll just give you the parameters. The Dow needs 21,226 to make leg E in the daily. And the S&P, SPX.X, here we are. Also made a peak B. That was a high with a 2-bar reversal at 2440.23 on the 2nd of June. Now what we're looking at is that there's no other way. I have to call that a peak B. I think we will go to a C and a D, and I don't think it's going to be all that much higher. But in the meantime, the buy modes were reactivated in the Dow and the S&P. Had no choice. That's just the way it is. And it's leg D now in the monthly chart. That's the reason why I am getting a little bit concerned, and I'll be doing a lot of analyses. We're starting to implement some individual stock shorts if it's possible, where possible, I should say. But also we're waiting for the long side to unwind to the point where we've usurped all the upside energy, and then we start to see some downside activity. I don't think this is it. I think we got a little more of upside to do. We have some long positions, a couple are doing very nicely percentage-wise. We'll see what happens. Days young. Let's go on. We're going to the QQQ series right now, trading at a new all-time high. At 143.47, it hit 143.73. That extends leg B. Here again, G/B. Everything looks like it should be a B. I'm calling it a B. I think we can still move higher into late this week, early next week. Then you got to be careful. Leg F. I am calling this though a leg F in the weekly chart. It's going to have to prove itself to say no. It's not an F. It's a recycled B or something like that. We'll see what happens. All right. And the monthly chart is only a leg C. That's really very, very bullish looking out. Okay. IWM. IWM is trying to play catch up. It's at 138.30, down 68 cents. It's in this trading band. I suspect it's going to try to make a new recovery high. It needs to get above 141, and then 141.82 is the all-time high. Then a couple of questions we've got. We'll get to them in a moment. Let me just go to the gold. Gold is up quite sharply today. It's up 14 at 1296.8. Actually, I was speaking to someone earlier today. It's really a very good analyst in terms of looking at all the different indices, but very, very good at gold. He went long gold about December a year ago, and he got that fantastic move. Then he got out, then he got back in, and he still likes gold a lot, and he thinks there's going to be a bounce and then a very sharp decline. That's very interesting. And I said to him, you know what? For my subscribers, we have a silver stock. It's just not acted as well as silver has. And today, he said, well, you know, it should be. I said, well, today's the day. If they don't move today, that's going to be very sad. Well, they are moving very nicely. And in fact, there's a lagging effect. And this lagging effect is what we've seen the Qs as the QQQ has pushed some of the indices, like it took the Dow after 13 weeks. Finally, it took the S&P to a new high, it took the Dow to a new high. And I suspect we'll get the new highs in some of the lagging indices. And, you know, we can't complain. We've got about a 6 or 7% move, as I say, in one of our small cap stocks, and a very nice move in another small cap stock. I'm just trying to keep as much cash as possible, not to be too short or anything like that, and to be long, not too long. We'll see what happens. This is an interesting phase, and then we'll get to Friday, and we're going to have to make some big decisions. All right, let's go on. So within the gold is a leg C in the daily, but it's so close to making a leg D in a very sharp V-shaped pattern. In the continuous contract, if it takes out 1,370, and it's at 1,300, it's at 1,297.90 right now. Almost there. If it takes it out, it starts leg C in the monthly, starts leg D in the weekly, and it continues at this point, leg C in the daily, and it's done a left side, right side price time match. Look at that. Oh, isn't that nice? And yeah, let's just look at silver as we go to a break. Oh, I meant to show the 10-minute chart. 10-minute chart suggests that there should be some new recovery highs to come, and leg D above 2434.25 in the 10-minute E-mini chart up right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, let me just do this quickly because I'll go on with our analysis of the markets, but this is important because the earnings come out at the end of the day, and I had a request for it. So let me just get to it. And this is Health Equity Inc. platforms for tax advantage for healthcare. It is Health Equity Inc. is HQY, trading at 48.54. I saw this in Investors Business Daily. I liked it a lot. The move was a little quick for me. When I saw it was making this U-shaped consolidation pattern right here in the daily from that peak G on the 10th of May at 46.85, pulls back, and I just didn't, and then boom, it ran up. And that run up, there was a slight chance of an alternate count, but it really looked like it could be a C. Then I forgot about it. Now today it hit 49.69, trading at 48.56 right now. Now this is what I would say. If earnings are coming out, if you are long this, regardless of whether the earnings are a disappointment or whatever, it really looks like a very strong stock. But when I do an analysis of it, it's in a leg D in the monthly. It is an alternate count. It depends on what happens with the earnings after the earnings, but I would immediately call it E/B. I'd emphasize that I'm thinking I want to be safe with the E in the weekly chart. And that says that at 48.56, I would be taking a little bit off, even if it gaps to the upside. And I'll tell you why. I think it's rallied in response to the anticipation that earnings are going to be good. Therefore, it might have already done its work, and it could be a little bit vulnerable. So my thinking here is one of two things. One is I take a little bit off. If there is a sharp pullback, I'd give it 2 weeks to consolidate, and then I'd consider adding that money back that I just took off. Or I was saying, hey, you know what? It's great if it pulls back 10% to the 44 level because earnings are a little disappointing. That might be the turnaround with the daily and then a double top in the weekly. I need evidence for that. So just to be cautious, I'm going to say either way I look at it, I don't see any reason if I believe you've been long for a while, just take something off, and if it spikes, if it gaps up 4 points, great, you've got your core positions, wonderful. But if it pulls back, it's gonna force you to make the decision of, is that money I want to put back? Is it still there? What are they leaning towards? Because I think this is one of those cases where the earnings report and the outlook, if they're in sync and they're positive, you want to be putting money back. If it's just one of the two are slightly negative, I want to hold off, and I want to hold off because then there could be a big trading range between the 48s and the 37s. 30. What was the low right there? 37.62. Yeah, I did that by 37s, the March low. And if it takes that out, the low of that, then I'm just going to say, you know what? I'm just not going to put that money back. So I feel very comfortable saying, take something off, reward yourself. If you've been long, if this is a brand new position, I'd say, hey, there's no need to put money at work that doesn't need to be put at work right now. If it gaps up 4 points, you go in now and it gaps up 4 points, it's going to come back and retest the 48 level at some point very soon. So you don't really gain anything other than if it's a quick trade. That's fantastic. But if you go in now at 48.60 and it drops to 44s, you're kind of stuck. Now you've got a short-term position as a starter that becomes an intermediate-term or long-term position if there's a break below 43. So, yes, I feel comfortable saying HQY, looking very good. Please remind me in about 3 weeks to look at this again. But right now, I'm just saying let it play out tonight with the earnings, and I would take something off. Maybe even a little more, 1/3 of your position. Okay. Now, the other thing I wanted to do is, I was looking at gold. I looked at gold, and I just want to give you parameters rather than talking about it. What I'm looking at here is that if there is a break, not a break on the daily, but if there is a close on the weekly chart above 13.70, what it's really done is established that there's a real good chance that gold, under worse conditions, if the dollar starts a big move up, say in late July, early August, then gold could come back. But the moment it's going to the 1300s, it's really turning the 1220 to the 1175 area to tremendous support. And if that support holds on any big pullback later on, then there's a chance that gold later on, if there is some kind of inflation that the Fed has been able to spur and stir up, I think gold will participate. So I'm looking at gold and I'm saying, you know what? I feel kind of comfortable right now having some part of the gold move right now. It's actually silver. It's a really big percentage move on the day. I mean, you can figure it out yourself. You've got a stock that goes from $1.16 low to 125 right now as we speak. That's a really big percentage. I don't know if that's a turnaround, but it's at least a start. At least I'm participating. Subscribers are participating in this move. Now let's go on because I want to look at high-grade copper. High-grade copper at this point, as I went under the 200-period moving average, it's over it now. It's under the 9-period. Seems to be stuck in this range, trying to get to the 260s, but it's at 256. I'm sorry, it's at 255. And I just think it's stuck. Copper's stuck. I tried to sneeze using what I think is a monitor for volume on my microphone. I don't know if that worked. Anyway, sorry about that. Got the old sneeze out the way. Let's go on. We want to be looking at crude oil. Now, a lot of people have asked me the question, what is going with crude oil? Can you give me a downside objective for crude oil? And all I can say right now is that you've taken, look, if I draw a left side, right side price time match, let's go to the most important candle, the low right there. And we're going to go to the high right there. And I'm just going to go left side, right side. I'm going to go click. Nice technical tools and trade station. Click again. Make that pinkish. Make it dashed line. So if I go left side, right side, the move up that started, the big move up that started on the candle of the 10th of May in the crude oil when it was the low was 46.35, spikes to leg D right under the 200-period moving average. Remember, I said I'm a little nervous about that. It was also round number 52, but this is a continuous contract, so I'm not, round numbers don't mean as much as they do in the actual price point of a contract, of not a contract, of a continuous contract, but the real thing. It's come down. It's used a lot of time rather than price. It was a very quick plunge. That leg D became a peak D. And now what we're looking at is in crude oil, if it takes out the low of the 2nd of June at 46.74, if it goes to 46.80, all of a sudden you're in territory that says, oh, I don't have any support. And the MACD is still poor. The stochastic's trying to turn, but it's at 14%. I think it's going to single digits. This is going to be tough. most importantly, what I'm looking at, you see this chart here, the weekly chart, that's got an H pattern. Before we go to a break, I do want to go to the E-mini 10-minute chart right there. When you're looking at this chart, it's holding support. The MACD did turn down, didn't cross negative. Stochastic is poor, but it looks as if the E-mini, if it can get to 24.31.75, it's going to go for a leg D towards this afternoon at 24.34. Basil Chapman, Tiger Technicians Hour. I'll tell you what I was telling subscribers this morning because I think it's important about what's going to happen by 1 o'clock. We'll be back. Dow's down 32, S&P's down 5. Comp Index is now down 6. We'll be right back. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, crude oil right now, 47.23, down 17 cents. What I'm looking at here is there's a chance for a little bit of a bump to the 48.30s. Maybe if it gets to the 49.50s, that's more than a little bit of bump. But if it only gets to 48.30s, maybe 48.68, and then turns down again, the next turn down says that if it surpasses the low of 46.74, there's a real good chance it's going to test that low right there, 45.87 from the 9th of May. Now, the question is, where would crude oil go? This is the summertime, so there should be some cutback in inventory because of the usage of just driving, anything that has to do with the use of oil in travel, airlines, etc. A lot of things are going on right now. So that says to me that I still think we're going to be stuck between the 45s. I'm not sure yet if we're going to 44 to test that. I think it's between the 45s and the 51s, just maybe even 52, but I think it's stuck in a range. And I wouldn't be surprised if we're getting close to some kind of a balance. How do I base that? I base it on the MACD starting to try to form some kind of the 0% line. The bars are becoming just a little improved, and the stochastic starting to make slightly higher lows. But the monthly chart still says you got to be careful, because this is the pattern that goes from a lowercase h to a lowercase m, and then it retests and often takes out the low before it starts a much bigger rally. So that would be 38.70s. I don't even want to go there. I'm just thinking that just for now, I'm thinking crude oil is just kind of stuck in a range. There has to be a plunge. There has to be a very ugly candle that just takes out every support that you can see between 46.20 and 45.80. If that happens, then I have to say, going to test the long wick of the 5th of May, where we went down to 44.10. That's on the shorter term. All right. But I do think it's ready for a little bit of a bounce. Okay. And I must say that I really do think that this market is going to go higher before we get all the little duckies in order. Let me just see this. There you are. So this is the 10-minute. I believe that 10-minute at 24.31.75 right now. It really has to get over this bar of 24.32.75 that was made 11 o'clock as my show started. It needs to break that. It breaks that, and we're going to go to a leg D. In fact, right now, I have no choice but to change that to, no, I'm very close. Very close. I'm going to do it in any case. To an up arrow to say there's a buy mode underway. I took a chance there. I should have waited one more bar for this bar to finish. But we'll come back to it. All right. A little premature. We'll see. I want you to look at bonds. So when you look at bonds and you're looking at the U.S. contract, we're in leg E. And what I say to subscribers is that the pattern that I'm looking at in the yields that we had studied over the weekend, the triple yield chart, it really suggested lower lows and lower highs at least for another week or so. And that's going to take us into the Fed meeting. Maybe the Fed meeting even tomorrow will hint. But it's the Fed meeting of next week, I believe, that is really the key. But if you're looking at the TLT, that just went to a leg E, and it's way above the 9-period moving average. It's above the left side, right side price target. We actually long from 123. It's at 125.79. And this is leg E. I really don't think it's going to be an instant restart. You never know, because if I'm looking at another just 5 sessions, that's not days, that's 5 sessions. So that's from today. So that's Wednesday, Thursday, Friday, Monday. Yes, 5 sessions. I think we're going to really know a lot of information within 5 sessions. And this is my thinking, that the SMHs are really close to some kind of a digestive phase. Now, I've said that for a while, so you don't have to believe me. What can I say? Wolf, 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 wolf. But there is just so much going on here that says that by any measure, at least a consolidation. I don't know yet whether it's a really big plunge to the downside, but a sideways consolidation between the highs that are set this week and very good support between 84.50 and 82.70. In that area, I think we're going to see some kind of a sideways move, mostly because the monthly chart is so spectacular. But if you look at individual stocks, you look at individual semiconductor stocks within the SMH. Let me just see, MCHP. I don't know if I've updated this lately. Look at that. I'm calling it a leg G. This really looks like a recycled G/C. I'm going to call it a G/C. Edit, G/C. And that's the daily. Leg E in the weekly and a leg E in the monthly. So, I could find so many of these. And they've had fabulous moves, and they've had a good reason to rally because they've come out with very good earnings. But by every measure, we are now at the upper end of all the technicals, the on-balance volume. The stochastic's flat at 91%. That's good. That's the reason why I'm saying consolidation rather than smash to the downside. And the MACD is still very strong. And that's another reason why I'm saying 3 to 5 days before we want to be looking, at least I want to be looking at trying again to short the semiconductor index. So, okay, I think we've covered most of what I wanted to do. Now the quick question of XLF, we always look at that. XLF, just chop, chop, chop. Remember, sideways action, chop, 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 until there's some kind of definitive measure that the banks like Bank of America, JP Morgan, etc., can start to find some kind of traction. And it most probably is going to be when finally bonds start to rally, decline and yields start to rally again. And that might be a little time. So I'm thinking the XLF is still somewhere to keep your eye on, as I did when I did my webinar about a month ago. I said, we want to be looking at the Goldman Sachs, we want to be looking at Bank of America, the XLF, but not yet, a little later on. And I'll keep saying that. Let me just, a good point here, KRE right there, KRE is the Spider S&P regional banks, same thing, made a peak E in the weekly, peak B in the, I'm calling it B, could be an E, a B in the monthly, but the daily says that 51.24 level is such important support, and it's at 51.84 right now. Let's just give it a little time. And I do think regionals actually could have a leg up when they finally turn around before they, it might have a better percentage gain than the XLF. We'll see. Okay, we're not in it at all. XOP was a question. XOP is, in fact, the Spider S&P oil and gas exploration looks the same thing. I just don't see anything here. So the question is, can it break down below 31? It's at 32.30. Yes, I do think it can break down below 31. And if it does take out 31, you've got an arch formation in the Spider S&P oil and gas exploration. And the weekly chart is showing no strength yet in the technicals, and neither is the, well, on the very short term, you get a bit of a pop-up in the daily. It's at 32.25 XOP. I don't see anything yet. And it might be a situation where I see a very nice rally and then I say, oh, is this the rally? Well, then I'm going to have to do a lot of work based on the daily and weekly technicals. The monthly chart says if there is a hold in the 31 to 32 area, and by the end of June, there's a pop above 35.80 to about 36.90, that'll have saved the day and say, yes, now I can see the exploration area having a pretty nice rally. We'll be back. We'll go to Joe in Long. Joe, you want to look at ARR? I'll do some work on it. We'll be right back with Joe in Long Line.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman. We're back. Dow's now only down 8. S&P is down 1. Nice. I say nice because I want to see new highs. Okay, so we're looking at ARR, Armor Residential. It's a REIT, and we've got Joe in Long Island. Joe, how are you?
Good, Basil. Thanks for taking my call. Last week I see they filed for like an 8K, $5 million share that they could sell when they want. So I got nervous and I sold out of both of my accounts. I have it in a Roth and an individual. And so, because I thought maybe it would come down, but what's happening is it's going up, So, I thought maybe I can buy it back like somewhere like a little. I got out like 10, 15 cents under where it is. How is it looking to you? I was thinking we would get some kind of pullback, but I guess not.
Yeah, there were a couple of things. As I was doing some work, I remember years ago, well, maybe it wasn't years ago, it was a while back. I did some work on this, and the reason why I remember it is that it's Armor Residential, and it's spelled ARMOUR, and I thought, okay, that's good because that's the English way to spell armor. And it just stuck in my mind. And also it's ARR, and I remember it's going, matey. So, it's funny how, whatever, it isn't a purely technical term, but it got me to remember the stock. Now, what I'm looking at here is that you see the way that it walked. Well, I don't have to see it because you were watching it all the time. It really walked the 9-period moving average from the time it broke out. The last move up back about the 18th of May. It went above that 9. In fact, it started right on the 15th. It started a bounce, and that bounce was really walking the 9-period moving average. And this is a fascinating concept. I've got a picture in my mind. It goes back, I think, to the 1980s, maybe the 70s. I don't remember. A long time ago. I'm thinking Pfizer or Merck. I remember looking at this chart, and it had the same thing. I don't remember if I had it on a 9-period moving average, but I remember looking at the chart, and there were these little tiny bars. And in fact, it was probably a bar chart. It wasn't even candlesticks. And these tiny little bars, but they just kept going higher highs and higher lows, higher highs and higher lows every day. And it just kept going and going. And I remember calling it, looked like a worm climbing a tree, because it's just a small little body and it keeps going high. It's not these big candles. And it's really impressive. And you keep saying it's got to come back. It's got to pull back. And it doesn't pull back. When it does pull back, I'm in your camp. It's a real quick and sharp move to the downside. But the steadiness of all these little bars creates a momentum to the upside that often that big slide is quickly corrected, and it goes right back to doing the same thing again. So now, this is a dividend stock. What do they pay? About 380, 420? I don't know. What would they pay as a yield? Do you know?
It's like 220 or something like that.
So it's okay. So that's quite low. All right, 220, and it's a $26 stock. But still,
Yeah, 222. It's like 8%, 8.7%.
Okay. There are. That's what I was looking at. All right. So what I'm going to say to you is this. So now you're out completely, and I don't blame you for saying, you know what, I'm a little nervous here.
I'm not a good loss, Basil. So that's why I'm saying maybe I should try to get back in. I'm a little concerned.
So now I'm seeing it in leg D in the weekly, it's in leg D in the monthly, and in both those charts the technicals are still very strong, except the technicals are up at the high range. So here's what I'm going to suggest to you. I don't know which account. I would prefer to see it in the longer term account, one that you don't really touch very often at all. I'm going to suggest, now this is not what I normally would do, but I know that you've looked at this, you got out of it for certain reasoning. I don't think you're going to be wrong. I think it's going to be pulling back quite soon. But the way it looks, for a 10% loss with an 8% potential dividend, I think that this is in the camp that says it's going to hold a lot better than one would anticipate. So I'm going to suggest a small part of what you've just taken off, even though you're buying it close to the recovery high, I'm going to say put something back. I don't really want to see you out of the stock completely, even though I think you're right in about that it should consolidate. The way it's acting, it looks to me like investors are determined to keep buying the stock. They've held it very well. Is it a difference between buying it here at 26.04 and buying it at, say, 24.80? Yeah, there's $1.25. But I'm looking at this as if the monthly is going to continue making higher highs and higher lows into the fall. That's the way it looks at this particular point, even though it is a little bit stretched. So I do want you to have at least a foot in the door, just so that you don't forget it, you keep in contact with it all the time. And then let's give it even a week. What's today? Tuesday today? Yeah. Let's give it until next week, Wednesday or so, and look at it again. So here's my recommendation. On one of the accounts, put back a portion of it.
Yeah, would you buy it back higher? Like I got out like 25.87, something like that. You would buy it back like. You see,
what I don't want to be in the camp here, right, of saying I'm going to make a big fuss over $2 on a $26 stock, when the way it's acting looks very much like over the next 3 months, it wants to tackle that very ugly candle of January of 2015 that has a high of 29.92 and a low of 26.48. So you see where I'm going. What I'm saying is there's a cup formation. There's no sell signal yet. It's getting close on the daily chart. It could still go higher before it even gets a sell. It might even go to 26.45, and then by next week it starts to come down again, and that'll be the move that actually takes it down, the 1.5 or 2 points. But so yeah, you could wait if you say, I got out. I think I'd be. Is it going to go? Here's your question. Your question is, could I get back in at about 25.30 to 24.80 over the next 3 weeks? And my answer is probably yes, but it might go higher before then, but probably yes.
Yeah, so after the dividend, in other words, the dividend's on the 13th.
Oh, there you are. Okay. Oh, thank you for telling me that. Then what I'm going to recommend, that's a little, and it's to people who are holding it when? Right now?
Well, it goes ex-dividend on the 13th.
Okay. All right. So, so either way, either you get the dividend and it pulls back, or you don't get the dividend, you buy it lower. Whoa, this is a little tough for me. All I'm going to do is I'm going to look at the stock, and it's got a week to go. It's a Monday a week. It goes ex-dividend. You could wait. I suspect, you have got out. Do you want to get right back in? Maybe the reasoning that you got out is a reason to say, you know what, I got a little nervous. I don't really want to take a chance of even a 2-point loss. So maybe the best thing is just to hold off. You got two choices: do nothing and just wait, In a week's time, we'll have a much better picture of the market as well as ARR. But the other thing is, I wouldn't feel afraid to just get a little bit right now, just to get my foot in the door back in again at this price. So you don't have to, but I'm saying I would nibble.
Okay. Thank you, Basil.
Okay, let's hopefully we can speak again in about a week, Joe. And good luck with this. Thank you for
very
calling.
much.
We'll be back, folks. We'll be back straight off these important messages to show you, yes, we've almost made that leg D in the 10-minute email.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, Ron. Yep, it just has to go. The E-mini has to go above 24, 34, 25, and that'll give us a D, a leg D. Dow's only down 5, S&P's only down 2. I think higher highs. That's what I think. So I had a good question. Ian the Den wanted to know how high can this rally in the next 3 days as you see it? It's not 3 days. I don't have days here. I do have cycles. And I have a cycle that says within the framework of higher highs and higher lows, the SPY is, I believe, only in a B, peak B right now. It made a top on the second at 244.35, had a 244.30 high yesterday, and if it makes a new high, it has to be above 244.35, so 244.36 if it's today. I don't know if that's it. So what I said to subscribers this morning, to my opening call, comes out at about, I start my charts off at about 6:30, whatever it is. I start off with the, in fact, I'll show you what I do. Let's go there. Right here. There we go. So I show the daily chart, the cup formation, the breakout. I had no choice but to call this a buy mode, even though it's leg D. That's where you get a little bit cautious. But this is the daily with different moving averages and Chapman wave methodology. Wave 3 in the Chapman wave. This is 4 in the moment. So what we're looking at here is with the MACD and stochastic strong, I expected new highs, but the on-balance volume is not that good. Then if you look at the 120-minute chart, that is this one here. That's the daily. So that was the daily. Here's the 120-minute chart. 120-minute chart without the MACD and stochastic, and then with over here suggests that you could test the 9-period exponential moving average and then bounce above it, and therefore you would start a leg C at 21,6. So the 21,226 starts a leg C. And that's what I'm expecting. And then that daily, the 120-minute chart should go to at least a D, so that would be a big positive. Then I showed another chart. Then I showed my 5 quadrants, I like to call them, right here with the Dow 120-minute chart, the volatility index 120-minute chart, Richard Arm's Trin index. I call it my Chapman wave Trin gauge because I only look at certain numbers, and then the bar chart of the Dow and the S&P, and then I give a particular call. And then I'd say that today, Dow minus 40s, S&P minus 6s, Compex minus 15s at 1 p.m., rather than just slightly lower or higher at that time, could see weakness into Wednesday afternoon. But my analysis was that I think, based on all the other things, when I gave the E-mini chart as well. Is this the E-mini chart? No, that's not the E-mini chart. All right. Well, when I gave the E-mini chart analysis, the thinking was that there should be a turnaround a little later in the day, and that the Chapman wave Trin gauge should still be flashing, and that there should be a 9 to 11 point rally off the lows. And if by 1 o'clock we're in the positive area, that'd be good. Okay, so there we are. So that's the SPY. If you're looking at the QQQ series, I just have to call this a leg B, and this 5 is going to be moving over to the right. That's all it is. I haven't got a sell signal yet based on it. So I'm thinking B, and we made a new high today, and that suggests that if there's a new high today, we could keep going in the QQQ series, and that could push us right into early next week. I have to wait for the Qs to give me a signal. If you look at the XLK is trading at leg C right now. I got to get rid of that. That I said is wrong, because we didn't turn down sharply. We're moving up, so that's all delayed. That's the same pattern I'll be looking at later on. So is that the end of the show? That's the end of the show. So let's just make it clear. If by 1 o'clock there's a move that's more positive in the indices, especially the Dow, if it's slightly positive, and the VIX is starting to pull back again, that says that should be a pretty decent close, and we will get that 9 to 11 points off the low that was made recently in the E-minis, and that will help the cash indices. And then I think tomorrow could be a good day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.